Chapter 13. Dissolution of a company. Introduction. A company is an artificial personality which comes into existence by law. It is a creation of law. Company does not have a physical existence, so it cannot be ended naturally. Day-to-day administration of a company is done according to law. The company can be ended only by due process of law. For the winding up of a company, a dissolution process has to be carried out. If company is insolvent, it cannot be ended. A liquidation process and legal procedure is to be followed. Only then the dissolution of company can be achieved. Thus, winding up precedes dissolution. 1. Meaning and definition of winding up of a company. Meaning. In general term, winding up is the process of bringing to an end the life of a company. Winding up of a company means to end the legal entity of a company. Creation of company and end of a company can be done only through a legal process. When a company is in liquidation, its corporate status and powers continue. A legal existence is there. Its assets are realized by a liquidator and its debts are paid out of the proceeds of this realization, and any balance remaining is returned to its members as per provisions of the Articles of Association. Definition. As per Professor L.C.B. Gower, winding up of a company is the process whereby its life is ended and its property administered for the benefit of its creditors and members. Thus, dissolution means bringing to an end the legal personality of a company. In a company, winding up precedes dissolution. 2. Modes of dissolution or liquidation or winding up of a company. To dissolve a company, a winding up process is followed. Generally, the economic condition of a company is poor and it is not in a condition to pay its debt, then it is decided to close down its business or wind up. A company may be wound up under any of the following modes of winding up or liquidation: compulsory winding up, voluntary winding up. Under this, voluntary winding up by members, voluntary winding up by creditors, compulsory winding up by court or tribunal. Meaning, winding up of a company under an order of the court or tribunal is known as compulsory winding up. Grounds of compulsory winding up by the tribunal. A court may order for compulsory winding up of a company on the following grounds. 1. Company unable to pay its debts. If a company is unable to pay its debt, the court may order the company to be wound up. If the economic condition of the company is poor but it has no debts, in that case, court will not order for winding up. In most of the cases, when company is not able to pay its debts, then an application is made in court for compulsory winding up. 2. By special resolution. If by any reason a company passes a special resolution to wind up company by court, then company may go for liquidation. Members of the company may pass special resolution in general meeting for liquidation of company. Directors of the company are authorized to apply in court with copy of the special resolution. The court, however, will pass an order for winding up only after it justifies the need for it. 3. Statutory meeting and report of company. As per the Companies Act, it is compulsory to call a statutory meeting of the company and a report is to be submitted to the company registrar. If company does not fulfill this condition, then the company registrar or shareholders may apply in tribunal. Company registrar has to seek permission with the central government before applying for winding up. If statutory meeting is not called on a specified date, then after 14 days, shareholders and other contributors may apply for winding up. 4. Incorporation certificate. If a company does not commence business within 1 year from its incorporation or suspends its business for 1 year, the tribunal may order the company to be wound up. If the tribunal finds satisfactory reason for suspension, it will not order for winding up. Under following circumstances, the tribunal may find satisfactory reason for suspension and will not order for winding up. 1. If the company has specified in the Memorandum of Association that business will be carried out in India as well as outside of India, and business is suspended in India, then it cannot be wound up. 2. If there is a possibility to carry out business in future, then winding up order will not be forced. 5. Reduction in number of members. If the number of members falls below the statutory minimum, that is 7 in case of public company and 2 in case of a private company, the tribunal may order the company to be wound up. Usually members initiate the winding up of the company. If the company continues business after the reduction in numbers of members for up to 6 months and existing members are aware of this fact, they are responsible personally for all debts arise. 6. The sovereignty and integrity of India. If a company has acted against the interest of the sovereignty and integrity of India, or acted against the security of state, or acted against the friendly relations with foreign states, the tribunal may order to wind up company. 7. Just and equitable reasons. The tribunal has wide powers on the ground of just and equitable reasons to winding up. The tribunal may order for winding up for the following reasons. 1. If there is a total deadlock and management of company is not possible. 2. The substratum, that is main purpose, has been lost due to any reason. 3. The company is making loss continuously. 4. Where the company was formed to carry on a fraudulent or illegal business, or the business of the company becomes illegal by a change in law. 5. If operations are done on minority in a company. Voluntary winding up. The company and the creditors or contributories, without going to the tribunal, may decide for winding up of a company. In voluntary winding up, the company and its creditors, company and its members, mutually decide on each other's rights. Meaning, voluntary winding up means winding up at the insistence of the members of the company without any interference of the court. Grounds of voluntary winding up or dissolution or liquidation. 1. Duration of company. A specific period has been ascribed in the Articles of Association for the formation of a company. A company may be wound up voluntarily by passing of a resolution in the general meeting on completion of this period. 2. Occurrence. In the Articles of Association, some events have been specified on the occurrence of such event by passing an ordinary resolution in general meeting. A company may be wound up. 3. Special resolution. A company can be wound up by passing a special resolution even if it is economically sound and capable of paying its debts. Voluntary winding up or dissolution by members. Meaning, where a company is solvent, it is able to pay its debts in full. The voluntary winding up takes the form of members' voluntary winding up. For this purpose, declaration of solvency shall be made by directors. Procedure of voluntary winding up by members. 1. Declaration of solvency. When a proposal of winding up is put forth by members, directors have to make declaration of solvency and it is to be registered with the registrar. Majority of the directors have to make an affidavit for solvency. The declaration of solvency not made in accordance with the law will make all proceedings null and void. 2. Resolution. Directors of the company calls a general meeting to pass a resolution for winding up of a company. 3. Announcement of resolution. Where a company has passed a resolution for voluntary winding up, it shall, within 14 days of the passing of the resolution, give a notice of the resolution by advertisement in the official gazette and also in a newspaper which is in circulation in the district where the registered office of the company is situated. 4. Appointment of liquidator. A liquidator is appointed to follow the whole process of liquidation. He administrates the financial matters of the company. 5. Cessation of powers. On the appointment of company liquidator, all the powers of the board of directors, managing director and managers shall cease. 6. Notice to registrar. The company shall give notice to the registrar of the appointment of a company liquidator with the name and other required particulars within a specified time. 7. To inform the income tax officer. The company shall inform the income tax officer of the appointment of a company liquidator within 30 days of appointment. 8. Reappointment of liquidator. If, due to any reason, the post of the appointed liquidator is vacant, then another person is appointed as liquidator. Company registrar shall be informed of new appointment. 9. Sale of assets. The company liquidator, by virtue of authority vested in him, collects the assets and may sell them to facilitate smooth winding up. 10. General meeting of members. Where the winding up proceedings continue for more than 1 year, the liquidator shall call a general meeting of the company every year. 11. Winding up of a company. The company liquidator calls the general meeting. He presents financial statements and reports of winding up. Report of the meeting is sent to the official liquidator. Official liquidator gives report to tribunal. The tribunal may then take proper decision for winding up. Voluntary winding up by creditors. Meaning, when a company is insolvent and the directors are unable to make the declaration of solvency, voluntary winding up is carried out by the creditors. This is called creditors' voluntary winding up. Procedure of voluntary winding up or dissolution by creditor. 1. Meeting of members and creditors. A company may be wound up voluntarily. The notice to the creditors and members shall be sent at the same time by post. 2. Appointment of chairman. One of the directors shall be appointed as chairman to preside over the meeting of creditors. 3. Resolution. A resolution shall be passed in the meeting of creditors. 4. Notice of registrar. Notice of the resolution passed at the creditors' meeting shall be given by the company to the registrar within a specific time. 5. Appointment of liquidator. The members and creditors may appoint liquidators in their meeting. The person appointed by the creditors shall carry out the winding up process. If no person is nominated by the creditors, the member's nominee shall be the liquidator. 6. Remuneration of liquidator. Remuneration of the liquidator is decided by the tribunal or committee of inspection or in the meeting of creditors. 7. Committee of inspection. The creditors may appoint a committee of inspection to observe the procedure of liquidation. 8. Cessation of powers. On the appointment of the company liquidator, all the powers of the board of directors, managing director, and managers shall cease. 9. Reappointment of liquidator. If, due to any reason, post of the appointed liquidator is vacant, then another person is appointed as liquidator. Company registrar shall be informed of new appointment. 10. Meeting of creditors. Where the winding up proceedings continue for more than 1 year, the liquidator shall call general meeting of the creditors. 11. Winding up. When the affairs of a company are fully wound up, the liquidator shall call a meeting of the creditors and members. The liquidator shall present the report of the proceedings of winding up. Such a meeting is called by an advertisement in newspaper, an official gazette. The liquidator shall send conclusion of the meeting to official liquidator. The official liquidator submits a report to the court. The court may order for dissolution from the date of report.